You open a financial app on your phone, expecting to see your normal balance. Instead, your thumb freezes. You're staring at 25 unfamiliar accounts and a mountain of default debt attached to your name. The immediate instinct is to click the dispute button. It seems like a simple paperwork error. You assume the credit bureau will see the obvious mistake, delete the fraud, and correct your file. Then the investigation results come back with a single word: verified. Suddenly, you're facing real consequences. A pending mortgage rate skyrockets, or a government security clearance is threatened by debt you never accrued. Those consumer dispute portals give you the feeling of control. In reality, they act as a placebo, masking an automated system programmed to distrust your word by default. To understand why a legitimate dispute fails, we have to look at how credit reporting actually makes money. You are not the customer of Equifax, Experian, or TransUnion. The actual customers are the banks, insurers, and data furnishers who pay hefty access fees to tap into the credit reporting network. In this ecosystem, you are the raw material. Your financial history is harvested, packaged, and sold to those paying institutions. Because you don't pay the bills, you hold zero financial leverage. The automated dispute system is built to protect the continuous flow of data for the real clients, not to ensure justice for the product. The credit bureaus construct your profile using a mechanism called data point matching. Instead of a human manually verifying that a specific loan belongs to you, an algorithm scans for partial matches. If you share a last name and a home address with your father, the system easily blurs the lines between your two identities. The most vulnerable data point is your social security number. A single typo by a data entry clerk, being off by just one digit on a loan application, is enough for the algorithm to link your clean file to a stranger's history. Litigators refer to this collapse of data as a mixed file. Once that first incorrect account drops onto your report, it acts like a magnet. The algorithm uses that bad data to validate the addition of even more incorrect accounts, burying your actual history under a stranger's financial life. This big dumb machine doesn't verify absolute truth. It calculates probability based on minimal data, writing off ruined individual profiles as an acceptable operational byproduct. When you attempt to report a mixed file or obvious identity theft, your complaint drops straight into an automated black hole. The credit bureau does not launch an independent investigation. They simply ping the bank or lender, the furnisher, who supplied the bad data in the first place. The furnisher's computer checks its own internal records, spots the same typo it originally made, and blindly replies that the account is valid. Paying actual humans to conduct thorough manual investigations for millions of consumer disputes would require a massive restructuring of their business model. It is mathematically cheaper for credit bureaus to operate with a margin of life-ruining errors and settle the occasional lawsuit than it is to fix the core matching algorithms. To fight back, you have to stop treating the dispute portal like a customer service desk. Every piece of paper you submit is the first step in building a binding legal record. Your primary tool is the Fair Credit Reporting Act, or FCRA. This federal law requires bureaus to maintain maximum possible accuracy, providing the external leverage needed to force them to look at your file. If dealing with identity theft, your local police department usually cannot help. They lack the resources and cross-jurisdictional reach to investigate digital financial crimes. Instead, you need to file an identity theft affidavit with the Federal Trade Commission. This establishes an official federal law enforcement report. Submitting that affidavit changes the dynamic. The internal ecosystem is programmed to ignore your word, but the credit bureaus understand the strict financial liability of ignoring a federal document. You won't spot these systemic errors on a free, gamified credit app. Those platforms only display a polished, truncated version of your profile. You have to pull your raw, comprehensive file from annualcreditreport.com. Look closely for algorithmic traps, like an unlawfully re-aged debt, where a collector illegally updates the date of an old default to keep it damaging your score longer. Pay special attention to the soft pull section. This reveals exactly which insurers, lenders, and brokers are quietly monitoring your damaged profile behind your back. The credit reporting machine will never fix itself. True financial defense requires stepping outside the app, auditing the raw data they are selling, and forcing the system to correct the record.